Meantime, more signs of cost pressures in the retail sector today. We had a number of earnings reports. We also have the Wall Street Journal just reporting that Walmart plans to cut 1,500 jobs to help manage expenses and speed up decision-making. This after all these retailers this morning raising concerns over the impact of tariffs. Target cutting its full-year sales outlook. TJX warning it could miss Q2 earnings estimates. And Lowe's saying it is seeing a drop in demand for do-it-yourself projects. For more on all this, let's bring in Bryan Gildenberg, Managing Director at Retail Cities North America. Bryan, great to see you.
Great to see you, too.
So when are we going to start actually seeing a consumer in distress? Because so far we haven't really seen it, but we've gotten signs and clues.
Well, I think you've got a couple of things that are going on right now. And the easiest way to think about this is the two-prong issue. You've got the math problem, which is what will happen to products that are tariffed and how retailers are going to treat the prices of those products. And you heard a bunch of the retailers talking about their varying approaches to that today. I think the second problem, which is harder to forecast, obviously, but more pronounced right now, is the impact that the inflationary narrative is having on consumer confidence. Consumers right now are expecting a 7.3% inflation rate for the next 12 months, which is the highest number since 1981. Is that right? Probably not. But whether it's right or not matters less than whether the consumers believe it or not. So I think right now what needs to happen is the actual math on tariffs will be one thing, but I do think that the narrative settling down around what a known amount of inflation and a known trading and a known balance of what's going on from a trade terms point of view would be extremely helpful to helping both the consumer and then the retailers forecast results.
Bryan, it's Karen. Thanks so much for being on. So we're heading into summer. We got back to school season coming up. How often does consumer sentiment not align with what the consumer actually spends?
I think we always try to look at consumer sentiment in terms of its direction's probably more important than the absolute number, and that consumers, it's kind of, you would assume the consumer sentiment would drive purchase behavior, but what we often found was exactly the opposite, which is that what you were able to buy changed your sentiment. So I think there's going to be an interesting impact to that as prices go up. If prices go up and as they do, shoppers are going to feel worse about their situation in the short term and in the medium term. And that'll probably put a bit of a crimp on expenditure. I think the other thing right now is that it's important to remember that the American shopper is extraordinarily gun shy about inflation, having just gone through 2 or 3 years of relatively extreme inflation for us. And as a result, I think any narrative or any evidence that they can find will be sort of confirmation bias for the shopper. So I don't know how helpful it is to look at the past sometimes with this. It's really important to understand how consumers feel about inflation now and what they're going to see and hear now that's going to change or influence that behavior.
Walmart really got a drubbing, Bryan, from President Trump when it said that it might have to start raising prices on tariff goods soon. And it seemed like the other retailers learned their lesson in terms of how they approach price increases on their conference calls. Do you believe that? Is there a way for them to continue to keep prices low by haggling with vendors, et cetera? How much leeway do they actually have? Or did they just learn their lesson and, they said, we're not going to talk about explicitly on the conference call, but, off the call, they're like, yeah, that's probably going to happen because it has to happen. You mentioned it's a math problem. It is a math problem in terms of margins.
I thought Target had the sanest approach I've heard today to this, which is to say, look, prices move a lot, and tariffs will be one of many inputs into how we need to think about that problem. And I think Target was right because even just a stupid headline, but the dailymail.uk had a headline from a Target employee who posted on Reddit that the price of some charger went up, and that became news, right? So I think Target and a number of retailers realize that if they say they're not going to raise prices, that they're highly subject to somebody pointing out that they have. And I think Target's particularly gun shy about negative narrative at the moment, so that makes sense too. But yeah, I think there are certain retailers that are certainly less China dependent than Walmart and are in a more comfortable position with that. Walmart does derive a lot of its import volume from China, and as a result, I do think has to be more cautious about that. I think other retailers like Target, whose supply chain is more apparel centric, have been diversifying away from China as a source, as as a sourcing place for years, partially because that's kind of where the whole apparel industry has moved, and that's a very big part of Target's business vis-a-vis Walmart. I think every retailer is in a slightly different position with this, and to some degree, I think retailers are going to have to, they are going to have to figure out within the context of the politics what the narrative needs to be.